bad joke. Dropped at the first sign of trouble. They're only as good as the world allows them to be. I'll show you. When the chips are down, these civilized people, they'll eat each other. See, I'm not a monster. I'm just ahead of the curve.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitate it, never replicate it. Guys, I want to give you the keys to the castle for 2025. This year is going to be a whipsaw year. And look, if you're looking to align on a bullish side or a bearish side, I think all those people with that mentality that cannot adapt to a situation, they're going to lose their ass. After all, what is an investment? An investment is just a trade gone wrong. This year is going to be packed with volatility, which means there's a lot of money to be made, a lot of gains to be had. But psychologically, we as a people, you see it in sports, love to be on teams. Bro, why are you so bearish? Oh man, you're so stupid. How can you be bullish in this situation? Understand the volatility is what brings you profits, but also understand the dichotomy that comes with that. If you live in the US, look at all the exchanges. By law, they have to publish the amount of people that lose money on the exchange. The average is 80%. Pareto distribution. 80% of people lose money. Every time you make money in this market, you're taking it from somebody else. So you shouldn't care about whose team you're on. You should be looking out for yourself. You need to be selfish as a trader to build wealth. Okay. I've never considered myself a great trader. I view myself as Knish. If you saw the movie Rounders, it took me 20 years of grinding to step out to be able to do this full time. Other people have had much better results. Maybe you got into crypto early and maybe you hit some home runs. That wasn't me. I had to grind it out. But when it comes to cycles, when it comes to education, I've always tried to study, make myself a better trader because this is what I want to do with the rest of my life. I have no intention of ever going back to Merrill Lynch to work for somebody else. I want to do this on my own. So I'm doing this journey with you guys, and I'm here for this market cycle as it plays out. And everybody can learn. I guess most modern people can learn faster from watching videos, understanding, looking at education. But I just want all of you to go out and learn, okay? You can learn everything I know, probably about 80% of what I know, because 20% I'd say is my own magic mojo, but 80% of what I know just by reading the same books that I've read, okay? And that goes with all these other people on YouTube. There are no great traders on YouTube. I want you guys to understand that, myself included. I'm a profitable trader. I'm not a great trader. Great traders are billionaires, like Stan Druckenmiller, self-made billionaire. Scott Bessent, our Treasury Secretary, self-made billionaire. Scott Minerd, who passed away recently, self-made billionaire. These guys are great traders. They're not starting YouTube channels. They don't need to. They have all the money they could possibly need. My channel is a journey, my trading journey that I'm sharing with you guys. As I get better, hopefully you guys will also get better. I want you to understand this because I get sent clips all the time from people on YouTube. Hey, look at this cycle this guy's talking about. And the guy will just totally butcher the cycle, doesn't know where it came from, doesn't know the importance of it, doesn't know the backdrop of the information. And I see it all the time with people trying to use Fibonacci, right? The Fibonacci and the geometry of the market is math. It has rules. You can't just make up numbers and call it Fibonacci numbers. That's not how contraction and expansion works in Fibonacci. So I encourage all of you to go out and get education, whether it's on my Discord, somebody else's Discord, or just read the books of the great traders. It'll really help you in your journey because I want all of you watching this to be profitable this year because it's years like these that do not come around very often. And we have key cycles kicking in and the opportunities to make a lot of money. So let's go ahead and start off on this because this is really important to get into. Guys, we have some key cycles that are lining up here for 2025. I want all of you to be aware of, right? If we look at a couple of things here, if we look at just going back to the cycle top for the S&P, this is S&P futures. We're looking at January 4th, 2022. Maybe some of you have heard of the pi cycle. Probably don't know where it came from though, right? Who invented it as far as a corollary with the marketplace? That was Martin Armstrong, the pi cycle. So if you look at 3.14 years from the January 4th, 2022 top, when does that take you out to? That takes you out to February 28th of 2025. That's the pi cycle. In and of itself, nothing to be overly excited about, right? You can find cycles for a bunch of different things. Trading with Fibonacci, trading with cycles is all about confluence. So looking at the pi cycle, what else is lining up on February 28th? It's over here, guys, and this lunar eclipse node right here. February 28th is also a very rare event, a seven planet alignment that is occurring on February 28th. The last one occurred, by the way, I wrote this down, seven planet. The last one occurred in December of 2002, 2 months after the market bottom from .com. It's been a long time. Seven planet alignment, February 28th, right? Natural cycle, as well as the pi cycle from the SP top, SPX futures top, both occurring February 28th. But what else do we have? You guys know we talk about the solar cycle a lot. Lee, throw up the solar cycle chart. Highlight for me, if you would, 1929 solar maximum. Highlight for me, if you would, looking at the 1970s solar maximum, and highlight for me, if you would, .com. Okay, 2000 of March, solar maximum. These are called 11-year cycles. This is a solar cycle 25 that we are in. The peak of this cycle for solar maximum was not supposed to occur until 2019 or 2029. It got moved forward due to solar activity. So it's peaking, scientists estimate, this year, all the way into the summer. So you have solar maximum occurring as well. So just to recap, we have a pi cycle calculation from the S&P top, February 28th. We have a celestial alignment, February 28th, a seven planet alignment, which hasn't occurred since 2002 on February 28th. And now we also have solar maximum. But we also have the lunar precession cycle. You guys heard me talk about this before. It's an 18.6 year cycle. This is not the real estate cycle. The real estate cycle was a UK economist in the 1980s, Fred Harrison or something, I believe was his name. In the 1980s, noticed a correlation with the UK housing market with an 18-year cycle. Well, that's like saying the pandemic caused inflation. The pandemic didn't cause inflation. M2 money supply and the creation of money caused inflation, because inflation is always an everywhere monetary phenomenon, right? The real estate may move according to this cycle because it is a natural astronomical cycle, the 18.6 year cycle. It's measured in major lunar standstills. The last one occurred in 2006. And now we have the major lunar standstill occurring in March. Both, it's measured by lunar declination, both at minimum and maximum, which occurs March 7th and March 22nd. So you see late February into March, you're getting major cycles that are occurring. Now, what's interesting, here's a caveat for this lunar precession cycle, the 18.6 year cycle. This is the first time in recorded history solar maximum and the major lunar standstill are both occurring at the same time. The first time in recorded history. How far does that history go back? It goes back to the 1700s. This is the first documented time you will have a solar maximum, which has caused peak market tops, as well as a major lunar standstill. And that lunar event's happening in March. What else is in March, guys? The spring equinox is in March. Major pivot point, spring and fall equinox. Spring equinox to the day gave you the top of the .com to the day, right? Gave you the bottom of the market in March of 2009, gave you the pandemic crash. You see these key equinox pivot points, natural cycle, repeat over and over again. So these are just some of the things you need to pay attention to, as well as a total lunar eclipse on March 14th. That's another key one to watch. So these events, these cycles as they overlay, and just looking at my chart on the screen, guys, this is why I'm looking for a March top. Been talking about the March top since when? Since January, because of the key pivot points in the marketplace after we got the January 13th pivot low. We knew this was going to come back up. The March top is key to understand. So keeping this in mind with 2025 having these major cycles come into play, I want to show you some things on the charts that I find interesting, and stay fluid. Like Bruce Lee said, stay like water, be adaptable, because I'll show you what I think's going to happen, and then to be prepared for this second situation that could possibly happen. Looking at my chart, guys, we're just looking here at the screen. Three-wave move. We notice this is my lunar top chart. Every single major top, of course, these are the minor lunar cycles, including the pandemic crash, coincided with a lunar cycle change, okay? Pandemic crash, minus 36%. January 4th top, over here, 2022, 27% crash. All these individual crashes within this as well, and your decline down, some of which were quite steep, all coincided with lunar tops, right? So another 20% drop there as well. Now, we look at this, all of our larger corrections, 11%, lunar cycle top, you can just see this going up. What we have happening is with the three-wave move, guys, and I'm going to zoom in so you can see the kill box, but starting on February 28th, going out to the end of March, this is the key time to be awake and paying attention to the marketplace. Three-wave move, then you're going to get a top, and then you're going to get a correction. Is that the market top? It very well could be the market top. And again, that top I'm looking for is 6,300 to 6,450. Okay. Looking as early as February 28th into the end of March, lining up with these cycle pivots that we just discussed. Now, if we go forward, what happens if this isn't the market top and we have more room to run? You're going to get this retracement. My plan is to short the top. If we short the top and we get a strong drop, I want you guys to understand the concept of enzonami. This is a Japanese circular wave. When you're looking at this, looking at one-to-one relationships here, what was the sell-off from the January 4th, 2022 high? 27%. If we do make this key top and we do have a very strong retracement, you guys know all the recession indicators are triggered. They all triggered in 2023, 2024, and now we're here in 2025. So you could have a legitimate scare, and it could very well be the market top. But just understand a couple of key concepts here. If we fall back down this exact same percentage or close to it, 27, 8, 26, 27, 28%, look for key support here over from your high, your January 4th, 2022 high, as well as your July 23rd or July 31st, 2023 high. That's your 4808, 4634. This will give you a 28% decline, a matching decline as well. If you hold that ratio and do not break down further, then you just did an enzonami. You just did a one-to-one signal wave, and the next move can be a bottom and then going back up. I like to look at this as to what could happen, because when I start seeing so many people on YouTube start lining up now, I'm seeing guys talk about, well, this looks like it's going to be a March top, people expecting it. I think we're getting this March top, guys. I think we're getting a strong retracement. As you know, I'm looking for 10 to 13%. In this scenario I'm showing you here, this is 28%, right? But I want you to understand, if we get a steep drop, the market overvaluation comes down and we don't totally break down. We got to break that key support of 4,600. If we don't start breaking down even further after this 27, 28% drop, I think the most pain is going to be back to the upside, which is what nobody's expecting, right? And when we look at this and we measure this, looking at our fractal pattern here, we're looking at 7,500 on the S&P futures. That would be the next wave back to the upside if you cannot break down below the 28%. And again, guys, this doesn't affect my trade. I'm looking for this trade, whether it's a 10 to 13% drop. I'm planning on shorting this top, or we come down even further, 26, 28, 30% drop. I want this money. Okay. These are my swing trades that I like to do. But if we come down to this level and we hold the support level, very important to watch if we start accumulating and breaking back to the upside, because I think you have higher prices ahead. And I want to be long if we start getting breakouts to the upside. Okay. And that could also be into play here if you just fall 10 to 13%. If you start making bullish patterns, I'm going to look too long after my short. Just be aware of this. Very contrarian in this perspective, because everybody now, oh, look at the inflation. Tariffs are inflationary. They are not. Did my tariff rant last video. They are not inflationary. But this is all about what the mass psychosis in the market is. And again, I look at this and I see people on YouTube. I get sent these clips all the time, stressing over, is this wave one? Well, is this wave two here? And then I got three, well, maybe this is three. And then I got a subwave, a microwave. Look, whatever. That's Elliott wave. I'm looking at fractal patterns, okay? 5-wave harmonics or completion of a harmonic cycle. 5 waves to me, you'd have to decide, when is the beginning of this cycle? When did this cycle begin? You can go back and say, oh, after the great financial crisis. Sure. You can go back to the 1980s. You can keep zooming out. You can go back to after the crash in 1929, when the market finally bottomed in the 1950s, and say, look, it's been up ever since then. It just depends how far back you want to go. But just a key market indicator here was what? Massive global panic, almost a 40% sell-off in S&P futures. And then what changed the dynamic? Trillions and trillions of global money shocked the marketplace and fueled the next bubble. This is a bubble cycle. Could it be done up here at the 6,300 to 6,450? It could. What I'm saying to you is, do not be shocked if we get a drop 10 to 13%, or a really steep drop of 27, 28%, and then you start going back up again and you get back in the blue skies, because it may not be done. M2 money supply is really close to its all-time high. So you guys know we've been tracking that as well. So just keep this in your back pocket for future events. It's going to be key as we see how March plays out. Looking at this on the daily, again, just a zoomed in view here for S&P futures, guys, 6322, 6464. I'm just calling it 6,300 to 6,450. It's just easier for me to remember and say over and over again. And then, of course, the key cycles lining up as well with lunar pivots. Okay, this is going to be a fireworks month. You're going to see this come back up, I believe, and get into this trading range and top out. And where I want to be is in a short and ride that sucker down. Okay, profitable trades. Let's look at, well, that's the same chart. Let's look at the NQ. This is NASDAQ futures. Same concept, 3-wave move. Remember, the whole market, this is a Gann market pattern, an ABC. This is what he hid in his books, okay? Over 100 years ago. The whole market can be traded in 3 and 5-wave patterns. You zoom out far enough, you can turn a 5-wave pattern into a 3-wave pattern, and vice versa. You can do the same thing, okay? 3-wave pattern. I'm looking at 1618 at 23K up to 24,189 here on the NQ, NASDAQ futures to come up to, okay? You're at 22,235. By the way, I didn't say it yet, but the market's closed today, President's Day, in case our European friends were not aware. So that's what I'm looking at. That's the 3-wave. And then we're going to get a sell-off, and then the market's going to come back down. Let's see if I have this here. So when we look at this, what's the alternative to that? Just like the S&P. Our previous retracement after our November top, right, was 37.5% right here. If we mimic this and do another 35% drop, notice it's right to the 618, 15,269. If we mimic this, do not be shocked if we base and start coming back up again if this bubble is not done. It's a possibility. Also a possibility, this is your top up here, 23K to 24,189. I'm just going to call it 23K to 24,2, okay? Possibility that's the top. Going to short it when it comes up here, but look for this as you drop, right? As you drop, if you start taking out these key support levels, the key levels you want to hold, just like the S&P, is your previous high from November 2021, as well as this high over here from that July high, that range right here, which lines up beautifully with this 618. So these are just things to keep in your back pocket because this is a real possible scenario to play out. This is a weekly time frame. You look at this from the MFI, which is a volume weighted RSI developed by Bill Williams. And what do you have? I mean, you got massive bearish divergence the whole leg up, right? This whole leg up. Look at this, lower highs, just trying to get across the trend line. Now look at your momentum, same thing. So just be understanding this could very well be the top. I want to be in shorts, but if you bottom down here, you got another leg coming. And that's what you need to understand. So let's look at this on the daily time frame. Daily time frame, looking at US Tech, NASDAQ 100. You're breaking out above your Wyckoff trading range, 22,235. Again, looking at that 226, depending on the pattern you're looking at. So 23K all the way up to that 24.2. That's where I'm looking for this to get to. When's that time frame, guys? February 28th to the end of March. Sometime in that 4-week period with all these key pivots, I think we're going to see this get up to these levels. And then we're looking at price and time. I wish I knew the exact time. You guys hear me say this all the time. Time is more important than price, right? If you know the time when you're going to get a pivot, it doesn't matter the price because you know you're going to get the pivot. But we got to see where we get to in our cycle pivots as we start marching forward. But that's the prices that I'm looking at, guys. Higher prices to be had. Let's look at the New York FANG. I like this index. So I don't think this has Tesla in it, but this also has the rest of the Mag 7, but they also have Netflix, Broadcom in there. I think it's 10 stocks. They rotate sometimes. I don't know who makes those decisions, but just understand this is a tech-led bullish market, right? And look what tech's still doing, right? Tech is still breaking out. 14,029 on the New York FANG index. 15,025 is that next level up. Could this just reverse? Of course, you can get catalysts in this marketplace. You get some crazy announcement that scares the market, some tariff thing that provides some chop. Overall, guys, the market looks strong still. It's overextended. It's overvalued, the most overvalued stock market in history, but it's still powering towards our targets, lining up with our cycles. What does this mean for the DAX, guys? Looking at the DAX, I'm still looking at 24,622. Got above a key trend line here. If we get up to 24,622, you've gone up 209% from the pandemic low, 108% from your cycle low. Key inflection point, also the 200% move on my Fibonacci pattern. So I want to be watching that. Euro Stocks 50, a couple interesting things here, guys. This blue line, 4,268, this is Euro Stocks 50 futures. This is 50 blue chip companies in Europe. That's the high from .com, 4,268, right? You just got above it in 2021 November. But I'm looking for this to get up to 57.55, 6,003, right? That's the range I'm looking at here. One thing I should note, by the way, on the DAX, German elections are coming up, right? Hopefully the AfD wins a bunch of seats, but 24,622, and see what happens with the German elections. If it goes one way or the other, you could definitely get some volatility with this, depending how the market participants view the elections, right? Remember how we got our Trump pump. Let's look at the SPY. Go over a couple ETFs. These are kind of out of order, right? These are kind of out of order. Lee, why does this have to be this hard?
That's what she said.
You're such a child. All right, so look at the SPY 609. That's the key level you want to cross at the 1618. You cross it, 609.70. I'm looking for 641 on the SPY, guys. That's the level I'm looking at for the SPY to complete my pattern. 641. So higher prices are ahead. And if we look at the triple Qs, guys, triple Qs got to break out above 539. What level am I looking at? 559, 562, right up in this range on the triple Qs. If it went berserk, 583. Again, tech has a lot more volatility and it could definitely go crazy. I mean, just look at what Meta did, right? Set a NASDAQ record of 20 days up in a row. So look at Bitcoin. Same levels are at play. We need to hold 92. You're at 95.7. 108 still our high, just thereabouts. 115 is that next level up. And then if we go berserk, 130. Then this will complete our 3 peaks, 1, 2, 3 peaks in our domed house, which can send the market back down. And again, in confluence with whatever happens with the S&P, the mama market, we're going to see what Bitcoin does if, in fact, we get a massive retracement, hold some support, and then get a final leg back up to some of these crazy Bitcoin targets that you guys have been hearing about since 2020, like 500K, 250K, 13 million. That's the new one, right? That's the new one. So we'll see. But realistic targets, 115, 130, range remains the same. Got to get a breakout, right? It's going to be a leading indicator. What about Bitcoin here with our pivots? Here's your 92K. You really need to hold. You can throw fractals, guys. You can throw pivot lows down here, but you got to get buying demand. You got to get back up in this range. You're selling off a little bit today. But guys, overall, I talk about this every video. You're just coiling. You're just coiling, boys and girls. You're going to get a breakout or a breakdown. Again, my belief is it's going to be a breakout and confluence with higher prices across the market, looking at our key cycle pivots as well. And of course, Bitcoin bottomed on the exact same predicted date, January 13th, that I gave you for the equity markets, specifically the S&P. So keep this in mind as you're looking at this. Solana getting punished today, back down in the 178 range. You look at Solana, look at these fractals down here, guys. These are your support levels down here, 168. You're starting to get back in the higher levels here of this trading grid as you descend here. If you get back more into the meat and potatoes section here, this really opens up some potential lower prices on Solana, 113, 110. So you want to try to hold some of these levels, start getting some buying support here. But overall, you're just ranging in the crypto markets. They're much more beta than the equity market. So they're going to respond differently, right? 263 on XRP, still holding key support. You went sideways here. Here's your coil, right? Actually, you can just go ahead and draw this thing out. Here's your coil. Here's your, I'll lower this here. Here's your ceiling, right? And then here's your base. So you have this little trading range. You're trying to hold the top of this trading range. You want to try to stay on top of 252, so $2.50. Stay on top of that, and then you can start moving back up to challenge these levels. 318, 353, $4. Those were my targets there. We got to the 318, got above it actually. 353 and $4 were my next level targets on XRP. But you don't want to lose this bottom trading range at 217. You start losing this. If you don't get buying demand, then you're breaking down to lower price targets. What about Meta? Again, we talked about this. Set a NASDAQ record. I think it's 20 days up in a row. I'm looking for a 784 on Meta at the 2618, guys. We hit every target that we discussed. The 1618 at 537. We got to the 200% at 631. You broke out from the triangle. The next target is 784, helping to lift the markets. What about NVDA? Got a nice Wyckoff spring here out of your trading range. Bounce back up into your trading range. So we pull a fib from NVIDIA, go to your all-time high, pull it down. And you're above the 618 at 137. Next level of resistance is 144. If you can stay above 144, break out above 153, you have these higher level targets. If you can get some momentum in NVIDIA, 164, 177.99. Okay, those would be your next level targets. Typically in equities, you get moves up, you get a pullback, right? You base a little bit, get a move up, get a pullback, base a little bit, and then do something like that. So just see how this spiders along as we get closer and closer to these key dates coming end of February into March. Looking at gold, making those new all-time highs. Our target was hit with just within a few dollars. 29.46 was my gold target. We got the 29.4278. You could shop in here a little bit. Gold's moving with the markets, guys. Largest buyers are central banks, which is good. Not a lot of retail buying gold yet, but I think, just watch what happens when we top out in markets, because if gold gets up to my target, which I was looking for 3,000, right? 3,043, gold gets up there and starts topping, just understand it's been on a hell of a run, and it can have a really nice retracement, especially as we get retracements in the marketplace. All right, guys, I hope you enjoyed this video. You can support this channel by checking out the sponsors. If you want to trade, check out Bitunix. You can trade all the cryptos there. No VPN, no KYC. You live outside the US, check out SimpleFX. Awesome bonus structure there, up to $5,000 if you deposit $10,000 and instantly in your account to trade with. So check those out, guys. Follow me on X. Leave me some comments. I'll be sure to reply on this video. See you guys on the next one.